At the Federal Reserve Bank of New York to increase system open market accounts. Soma, that's that drug from Brave New World. You know, Soma, the thing that makes everybody sleep and not pay attention to what's going on. Hey guys, guess what's starting on Friday, December 12th? That is QE. Quantitative easing is restarting, but according to Bloomberg, it's not quantitative easing. It's RMB, reserve management purchases. The Fed has announced that it will start to print 45 billion of more of its liability units that we colloquially call dollars every month, and that pace is going to stick around for around 4 months or so until tax day 2026, at which point, who knows? But the Fed is starting to print money again, starting tomorrow. What does this mean? It means we are now in the final money printing round of this monetary system. This is going to be the last round until the end game. There's going to be some kind of event or something that accelerates it, just as there was in 2019 when something happened in 2020 that you probably remember, but I don't want to speak of it because it gives me bad nightmares, and I never want to live through something like that again. I'd rather go through the end game, frankly. Anyway, we're going to go through the statement. We're going to go through what was happening at the Fed in September of 2019 and what they thought their balance sheet was going to be 2 weeks before the apocalypse of that month of that year, which led to rates skyrocketing to about 10% overnight. And now that we are in the final QE round, it might be a good idea to get some gold and silver before it goes parabolic and you can't exchange it for dollars anymore. I don't know how much longer this system is going to last, but it's not that long. Get your gold and silver at Miles Franklin, link in the description below, and mention the endgame investor. Take what gold and silver you have or some of it and put it in a dirty man safe. Link in the description below. Use the code endgame10 for 10% off at checkout. And if you would like some spiritual lessons leading up to the endgame, which appears to be imminent given that the final printing round has now begun, then check out the Patreon at patreon.com/endgameinvestor. Link in the description below. I don't try to make any money off of that, just $3 a month to keep the trolls at bay. But our last lesson was in public works projects and the need to establish a just monetary system before public works are embarked upon. And where do we learn this from? From Jacob. After he returned from Aram back to the land of Canaan, he established a monetary system for the Shechemites, and after that, he engaged in public works. But anyway, let's get to this news. So here we have the headline from Bloomberg. Fed says it will begin Treasury bill purchases on December 12th. You see that cloudy, stormy sky over the Federal Reserve Building, which is the Mariner S. Eccles Reserve Building in Washington. Photographer El Drago. Here's the first sentence. The Federal Reserve said it will begin buying $40 billion of Treasury bills per month starting December 12th, which is tomorrow, as it's looking to rebuild reserves in the financial system, which dwindled while it was tightening its balance sheet. The central bank said in a statement, which we will go and read directly, that reserve balances have declined to ample levels and will initiate purchases of shorter-term Treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. Here's an updated version of the same article with a new title. A new and improved title. Fed quells market angst with 40 billion monthly bill purchases. And here's what banksters think about it. While Wall Street banks were bracing for the Fed to act, its operations will start sooner and will be bigger than most market participants anticipated. Harder, better, faster, stronger. We were looking for a January announcement, but it looks like the Fed decided to pull the trigger earlier, said Gennady Goldberg, head of U.S. interest rate strategy at TD Securities, adding that it's larger than the 15 to 20 billion they expected, about twice as large or more, because we're talking about 45 billion as opposed to 20 billion, maybe even triple. But here, Bloomberg clarifies that this is definitely not QE, not at all. It's completely different.
They're the same face! Doesn't anyone notice this? I feel like I'm taking crazy pills!
How do we know this? Because it says the purchases are intended for reserve management purposes rather than signaling a resumption of quantitative easing, the crisis era stimulus programs that the central bank used to lower long term borrowing costs and boost the economy. So this is not QE because it's instead reserve management purchases or reserve management buys, the RMB, just like the Chinese currency, but that's just a coincidence. But now let's get to the actual statement itself, shall we? Yes, let's do it. This is from the New York Fed's website directly. Statement regarding reserve management purchases operations. On December 10th, 2025, the Federal Open Market Committee directed the Open Market Trading Desk, the desk, in case you don't get confused, at the Federal Reserve Bank of New York to increase System Open Market Operation account, System Open Market Account, SOMA. That's that drug from Brave New World. You know, SOMA, the thing that makes everybody sleep and not pay attention to what's going on. Securities holdings to maintain an ample level of reserves through purchases in the secondary market of Treasury bills, or if needed, the Treasury securities will remain.
I'll have to ask my accountant about that.
These reserve management purchases, RMPs, will be sized to accommodate projected trend growth in the demand for Federal Reserve liabilities, as well as seasonal fluctuations, such as those driven by tax payment dates. So that means, when you have the end of the month little blips in the repo rate that go up and they spike, or during the 15th of the month on corporate tax days and the repo rate spikes. Well, those aren't going to continue because the Fed's going to print the missing money. So the second paragraph, we get the amount. Monthly amounts of RMPs will be announced on or around the 9th business day of each month alongside a tentative schedule of purchase operations for the subsequent approximately 30 days. The desk plans to release the first schedule on December 11th, 2025, with a total amount of RMPs of approximately $40 billion in Treasury bills. Purchases will start on December 12th, which is tomorrow. The desk anticipates that the pace of RMPs will remain elevated for a few months to offset expected large increases in non-reserve liabilities in April, meaning tax day. So, why is this so funny? Well, because if we read this statement from October 11th, 2019, this was when QE was officially restarted after the apocalypse a month before of September 17th. From September 17th, 2019 until this day, October 11th, 2019, the Fed only embarked on repo operations and didn't start QE. But this time, in October 11th, they finally did. And what does it say here? In light of recent and expected increases in Federal Reserve's non-reserve liabilities, the Federal Open Market Committee directed the desk to purchase Treasury bills at least into the second quarter of next year to maintain over time ample reserve balances to or above the level that prevailed in early September 2019. So this is what they called QE. It's increasing reserve liabilities, which are dollars, so that the banking system still has enough grease in it so everything can slide through there like a bunch of arteries with oil in them or something. And what was the pace back then? In accordance with this directive, the desk plans to purchase Treasury bills at an initial pace of approximately 60 billion per month, which was QE, but 45 billion per month is not QE, it's RMP. It's very different. Stop asking questions.
It's not a wiener, it's a frankfurter.
But here's another reason why this is so funny. If we go back to a statement from the same website, September 3rd, 2019, statement regarding the projections for the SOMA portfolio and net income. This is 2 weeks before the apocalypse of 2019. And the Federal Reserve released a document called an addendum to the open market operations during 2018. This is what it says. The Open Market Trading Desk at the Federal Reserve Bank of New York today published an addendum to its annual report from earlier this year, Open Market Operations during 2018. It was prepared by the Markets Group and presented to the Federal Open Market Committee, titled Projections for the SOMA Portfolio, basically the size of the Fed's balance sheet. That's called the SOMA portfolio, and net income. The addendum provides an updated set of projections for the path of System Open Market Accounts, domestic securities portfolio, and its associated net income. This document, called the addendum, which we're going to see in a second, is the Fed's projections for the size of its balance sheet 2 weeks before the apocalypse of 2019. Let's take a look at it versus what actually ended up happening, and it's pretty comical. On the top here, you have the projection. This was published, right, on September 3rd, 2019. That addendum, which we just talked about, assumed levels of Federal Reserve balance sheet in 2025. That's this year. And this is what is projection, the smaller liability scenario, the median liability scenario, the larger liability scenario. This is the biggest estimate that they had, $4.717 trillion. And you can see here Federal Reserve notes, reserve balances, lowest reserve balance, deposits in the Treasury general account. And this is the actual state of the actual Fed balance sheet today, or maybe last week, December 3rd, 2025. Last week is the latest balance sheet numbers that we have. But look at this, reverse repos with private counterparties. How many did they think they would have by 2025? 1 to 20, basically nothing. And that's true, except they missed the $2.2 trillion in reverse repos that they had in 2021. Forget about that, but whatever. The total, the largest estimate for Federal Reserve liability for the size of the balance sheet by 2025 was $4.717 trillion. And here, what is the size of it? It's $6.5 trillion. You take the total factors and then you add in the reserve balances, that's 6.5 or $6.6 trillion even. It's about 50% higher than the largest estimate that they had on September 3rd, 2019, just before the repo market blew up. But this time, they're preempting. They're going to start printing money right now, meaning tomorrow. That is why gold and silver are heading higher even faster. That is probably why silver is headed into a parabola. I don't know if there's going to be a correction. There might be a correction. There might not be a correction. The key is to be stacked already so you don't have to worry about this stuff. But now that we're on a beeline to the end game, you might want to check out the Endgame Investor on Substack before the internet goes down, because once it does, I don't think I'll be writing anymore. I'll be doing other things. But for now, just remember, we've started the final printing round. From here on out, it's going to be money printing, money printing, money printing until the dollar finally dies and we go back to pricing everything in gold and silver ounces, and we enter a new world that hopefully, with God's help, will be far less stupid than this one. This is Ralph the Young Game Investor, and I'll see you guys soon.
I feel like I'm taking crazy pills!